Alrighty, ladies and gentlemen, good morning. It's Tuesday, 5:30 a.m., September 5th. Gosh, can't believe it's already September. Yikes. It's still hot here in Florida. 90 something degrees outside. All right. Anyway, let's get this rocking here. Go through our 4-hour sweep. We'll do our beginning of the week analysis like we always do. Just don't always get to post it, but we always do it. So let's just run through, see what we're looking at. Just take a non-biased, objective look at the market. What are we looking at above us? What are we looking at below us? Where are our opportunities this week? Let's just get into it. We'll start with Buckcorn, everybody's favorite. Not really doing a whole lot. We had this weird drop. I think that had to do with Elon and Tesla saying they were selling some Bitcoin. I think they sold a couple $100 million worth of Bitcoin or something like that. I forget what it was, what the number was, but that probably spooked everybody, even though they had already sold it. They had already done it. They're probably selling into the high. Everybody was. It wasn't just them. I know there was others too. That what's his name? Sailor was saying he was done buying too. So that means he's probably selling. Nothing really to do here. Had a weird spike here. This was, I think, with the stock market indices the other day. Had a little spike up, and then back down. Not really much to say here. There's just nothing to do. Same story, same thing. We know what we're looking at. We're really looking at going into the halving. Who knows how low this is going to go before the halving comes. Historically it tends to sell off, so that's what we're going to wait for. It's kind of already started. It's just really low volume. There's very little interest in crypto right now. It just is what it is. It's that part of the cycle. And when it gets down lower, everybody will be talking about it again, and it'll be a good investment opportunity again. So we'll wait for that. Nothing really to say here as far as the day trade's concerned. We're technically kind of at the bottom of a range, but this just doesn't look great. So we'll leave that alone. Skip it. All right, so here's something. Got the dollar back up on the high, and we were expecting the dollar to run up and retest the high a little bit. That's fine. I really wish would have stayed in it down here. We caught all this stuff way back here on the when this broke the low. Gosh, man, we had this run. Just could have been like big life-changing opportunity there off the low. As of right now, we're up for like 7 weeks. Let's pause for a second. Take a look at that. I think we're 7 weeks to the upside here. 1, 2, 3, 4, 5, 6, 7, 8. We're opening our 8th week to the upside on the dollar. Who wants to play Russian roulette with this? Who wants to spin that chamber and pull the trigger? I'm not going long. I don't know. I'm going to wait for this high to break right here. Actually, it may or kind of already be starting, but man, this high is pretty close here. So man, 8 weeks in a row to the upside, struggling up here. We still don't know what's going to happen here. We still don't. This week hasn't finished yet. We don't know if this is going to make a high and slam back down like a wick on the top, and then who knows what's going to happen. This whole thing could be like an evening star reversal, and we don't see it yet. It may barely break this high and then come down. We don't know that yet, but let's watch this and see what happens. Have a feeling we'll be talking about this later in the week. Back to our 4 hours. Right now we have a higher high locally, and this is always something important to take a look at. It's just time to start paying attention to the dollar. No crazy lot sizes on the blind reversals like this, but these can be very good opportunities. And we're kind of co-equal highs up here right now with that previous swing high. This is a major swing high for months, so something to pay attention to. It's time to watch the dollar now. Again, we're back above the high. We keep catching it, and then it bounces and goes back up, but we've been all over it. It's not like it was a big surprise where it bounced. So we're going to watch for the high here. We're going to watch the high of the day every day. Just looking for the high. We'll watch things like Aussie dollar is going to be very low. Euro dollar, obviously. So here, going to watch the high of the day. How much time is left? An hour. Got an hour left in this candle. Yeah, I don't know. We'll have to watch that stuff on lower time frames. The dollar is obviously the strongest currency right now. Yeah, this is definitely something to watch because we have broken the high here, and we'll come back to this. But again, 8th week to the upside with no real corrective move. Barely broke the low here. Barely broke a swing low, but nothing major. Just back up on the high. So we're on the high right now after 8 weeks to the upside after a range expansion. And this is the important point here is this is coming off of an expansion of a low. So we broke a swing low here like this and then had to travel all the way up here that far, that fast to come back and expand this high. Like we're about to, expand the high here. It's just, man, it's time to start paying attention to this thing. It's pretty crazy. So obviously we're going to watch that. We'll be looking for any evidence of a reversal starting because when it goes, it's probably going to go pretty big. So obviously you want to pay attention to that. Memeing this out on the yen index, moving right along to the yen index. It's up, right? We've been watching these lows forever. So it's up. Man, while this is pulling back, this actually doesn't look like too bad of an opportunity either. I mean, we've got this possible transitional situation here. We went from lower lows to a range to higher lows, possibly. It's just a big range. Man, this is possibly pulling back a little bit to poke higher. We may be getting there, maybe getting close. Maybe time to watch the yen. It ran up last week. It pulled back now, but now that it's pulled back, there's a possibility that this makes a higher low. Like it certainly is a possibility. So as of right now, we've got a higher low on the swing low. So as this pulls back, we'll watch levels lower. Could be a potentially bullish yen this week. Could be. As of right now, like over the next few candles, we got only 2 more candles left on the daily chart, right? So on the 4 hour at least, we're trying to predict what the next 2 candles are likely to look like. Where are they likely to go? Because that's all that's left on the daily candle is 2 more candles, 2 more 4 hour candles. So as this pulls back, maybe we can get an entry here. We'll take a look at that. We're going to mark the yen, obviously. The dollar is obvious. We'll skip the yen for now. We kind of see what it's doing, but possibly rolling back up to the upside this week. If we do have a stronger yen, that could spell trouble for the stock market indices. Possible. We'll see. A lot of times the yen index will run counter to the stock market, U.S. equities index. So that may be a thing. We'll go through that in just a few minutes. Okay, so the dollar we were talking about being on the high. Obviously, euro dollar is going to be way down on a lower low because it has that inverse relationship with the dollar index. So now that we're back into here, it's funny, it blew right through that like it didn't exist. I don't know what we were looking at. Okay, yeah, looking at the gap here before. Okay, so what we have here on the dollar or euro dollar, this is going to be an important level right here. We got this consolidation, and just below that, we're going to be in the money. Just below that spike low right there, somewhere in here, if we can get there, going to be looking for probably some kind of a reversal liquidity, basically sell side liquidity just below that low. And that's going to be the important thing. Where are we within our range? Okay, low of the day today, we're going to be looking to buy into that. Anything lower than that swing low, and here's what we're going to do. I'm going to set an alert here for our group trades, just so I know when this goes back below. Here, let me get rid of this. Don't need that line anymore because we'll just use an alert. I want to know when it breaks that low. and starts to tap that sell side liquidity. There's a consolidation here and a consolidation here. Want to see when we get below that consolidation, we're going to be in the money. So anywhere in here, I'm sure that lines up right with our projected low of the day too. We'll take a look at it on lower time frames. Just a minute. But as of structural stuff, God, it was an expansion too. This broken inner high right here, barely, and then went back and broke the low. So interesting. Yeah, so as soon as we get below that, going to be looking at this. Going to be looking to buy the low of the day today with low risk and just see what happens. As soon as we tap that sell side, it'd be a good place to close shorts. All the breakout noobs will be trying to sell it after it's already been down for months. So it's basically on the low for, I mean, it would be the opposite of the dollar. So it'd be 8 weeks to the downside. Don't even need to look at the weekly chart because I can see it on the dollar. So it's going to be almost time to start looking for probably some day trade reversals here, and you can wait for confirmations. That's fine. You can either wait for confirmation, put a little more heat on it, or you can take a lower risk reversal, blind reversal. I do both. Moving along, euro dollar. So we're probably going to be heading back up on euro dollar is basically what we're looking at. Euro pound. Gosh, kind of a consolidation here. Yeah, this is just a big consolidation at the moment. It, however, has made a higher low. You know, we talk about that transition where you go from lower lows to equal lows to higher lows. How kind of ranges are formed like that. Happens a lot in consolidations. So now we've kind of shifted off the low here. Very clear shift bar, boom, whatever that was there over the last few hours. I don't know if it's pound weakness or euro strength. Like it might be pound weakness here over the last few minutes. So looking at the strength tool, I can see the pound dropped and then went flat. So it's pound weakness. So as the pound got weaker, the euro went stronger relative to the pound is what it is. Basically back up into some selling. We'll take another look at this in a minute. But our level from last week, it just went straight to it, held, and then shifted off the low. So now what we've got is, you know, we could probably look at this on lower time frames, and refine it down a little bit. As of right now, we got a bunch of selling right here. Pretty easy to see it. If you just look across right here, you know what I mean? Boom, straight up to it, rejected, probably going to distribute here a little bit, which would be fine. That kind of missed the move already on the pound. Maybe not completely. The pound may take a second leg, and that's something we're going to write down here. We got a possible weaker pound today, continuation. So we'll see. You know, if this, still got 3 hours here, but you know, say this candle closes something like down a little bit. So a lot of times it'll retest center mass there on a big candle like this. We'll watch that center mass. And a lot of times what'll happen is it'll hold back up, and the next candle will be something like that, like a little smaller bodied up candle, bullish candle. So that very well might be the case. And if it does, that means the pound may take a second leg down here. So as this gets back down a little bit, maybe we want to watch that too. I'm going to mark that. I don't trade that one much, but if the setup's there, it's there. It could actually be an indication of pound shorts. Possibly. I haven't really gotten to the pound yet, but just looking at euro pound and what's going on, it's a possibility. Euro yen. Let's try to move through this quicker. It's a big range. We keep catching this thing every time. We caught it here too last week. Every time it breaks the high, catch it again. I mean, it's just, we keep nailing it every single time for hundreds of pips. Just, you know, when it broke the high, it took 8 hours or so and then dumped huge, big dump. So what I see right now is a struggle bus kind of grind here. It doesn't look great. It doesn't look good. It's probably not a long or a short. It's at the moment, it's consolidating. You know, we have a range like this, and it would probably make sense on lower time frames. Buyers on the bottom, sellers on the top. We stay out of the middle, right? So, may not be anything yet. We'll watch the yen with this. We'll watch that dynamic. We just looked at euro pound, and we know this is probably going to retest center mass here, and then it may bounce too. And then how does that work with the yen? They're kind of both moving the same direction as the issue. The yen's pulling back and the euro's also pulling back. So that may not be the best trade. This may be choppy here. This may continue in a consolidation on euro yen. Now, structure wise, this is very high. We've been watching this one for a long time. It's way up here because the yen is very weak. The yen's been weak for this year. We'll just leave it at that. The yen is basically at an all-time low as of, I think, last week. So, eventually we're looking for a lower high. I mean, eventually we want to see this transition from higher highs to lower highs. We're waiting for that lower high to confirm, where we can say, oh, there's your lower high, and dump it. We're waiting for that, and we're waiting for that pump on the yen. The yen's trying. The yen index that we looked at a few minutes ago, it's trying to hold. This is basically the all-time low. This is not a short. This is one of the biggest trading opportunities in the market right now is the yen. It's trying to stabilize down here. And when it does, it's going to be up for months. We're going to have a one-way directional bias for months once this thing goes. And that's going to be big time downside on something like euro yen that's been up here for, it's at an all-time high. This was an all-time high last week. I think it was 25-year high, which might as well be modern markets. It's an all-time high. Modern algorithmically controlled markets, that is the all-time high. So, yeah, what we're looking for here, we already know that, we're looking for that lower high. There's a lot of density up here. It may come somewhere up into here. There's some density right here, and these levels tend to be it. Maybe if this will drift up just a little bit, maybe we do get that lower high. We'll watch this and see. There's a huge opportunity potentially. So that's a maybe. Moving on. 1 second. About to sneeze. Take a sip of my coffee here. You can see the move that's happened here on the on Euro Aussie. Hold on. Man, that moved. And I looked at all this stuff yesterday. Nothing was moving. So over the last 8 hours, so this was overnight in Asia. Over the last 8 hours, stuff moved. Other than before that, there was nothing happening here all Thursday, all Friday, nothing. And then 8 hours, boom, slam. But, look where it went. I need to actually check my levels too, and not just, yeah. You can see where we went here. So we'll watch this level, obviously. Hasn't been invalidated yet. This is not something you want to buy into probably after breaking a low like that and then running all the way up here that quickly. It's just likely to distribute and pull back into some structural inflection point like that. It's just likely to pull back. So there may be some trades here, and we'll watch this. Hold on 1 second. Let me make sure I don't miss any levels here. I got an alert for euro dollar, which is fine. I remember to mark my levels out. It's kind of the point of what we're doing here too. Euro pound, already in it here. I haven't beaten that level. 1 second. Go back to it. Just making sure we know what levels we're looking at above and below price. So we can make our determination on actual strategy on lower time frames. We'll run the range strategy. All right, so euro yen. 1 second. Let me just mark out what we're looking for. It's going to be the low there. Other than that, it'll be a broken low. What levels are we looking at? Where's there likely to be some kind of reaction? Other than that, gosh, yeah, nothing there. The euro yen's going to be a great short one of these days. We keep catching it, and it just hasn't completely died yet, but it may be trying. All right, so back to euro Aussie. All right, so we got a lot of selling up here. Just simple supply and demand. You know, it's the top of a range, and down here, yeah, there's a block down here actually, but yeah, I mean, this just never beat the buyers right here, just in its simplest form. And we'll go and refine that down on lower time frames. All right, so you know what's above us, what's below us. How does that have any confluence with our range strategy? It's really what we're looking at here. We're setting up our higher time frames. This can be the most important step in the beginning of the week. I mean, basically we can figure out exactly what we're looking for a lot of times and just wait. Literally just waiting for stuff. 99% waiting, 1% trading. Stuff's been slow lately, but that's probably about to change. Just remember, we know this from experience, that when you're in these long-term consolidations like this, after that tends to be big trending moves, one way or the other. Markets have been boring lately. That should perk your radar up. When markets are boring for long periods of time at once, that should get your attention, because the markets are probably about to start moving. Markets consolidate, and then there are long periods of consolidation with very short bursts of hard trends. So we've been in these crazy low volatility environments on these higher time frames for a while. That should get your attention, because we're probably about to start running some real trends here or get some major reversals. All right, so on the low, you're a Kiwi, whatever. I mean, come back to all this stuff, and you can see right here is a whole bunch of buyers that held. We just want to know where's the money, and then on the other ends of that, and on the outsides of those, in those gaps, that's a lot of times where the liquidity will be too. Depends on structure. All right, so Euro Kiwi, this is a Mr. Slithery here. We're waiting for Mr. Slithery to come down. Do the analogy of, like reading a storybook to a child. Sometimes the markets can be simplified down so much that a child can understand it, yet the risk management part is the hardest part of the game. It can be incredibly simple and incredibly difficult at the same time. So Mr. Slithery the snake is slithering up the mountain, and he goes down the mountain, and he goes up the mountain, higher up the mountain. Then he comes down the mountain a little bit more. Then he goes up the mountain even higher. And you hand a crayon to a 5-year-old and say, where's Mr. Slithery the snake going to slither to next? Where's he going to go, little Jimmy? And a 5-year-old will go this way, right? A 5-year-old can see it. Just to, over-exaggerated analogy here to just show the absurdity of how simple this can be, and also how difficult it can be at the same time. But a 5-year-old can see that, wait a minute, Mr. Slithery just went higher up the mountain, so he's probably going to come back down a little bit, right? So Euro Kiwi, major multi-year high up here. We just made another swing high. We just made another swing high, Slithery sling high here. Just to illustrate the absurdity of it and just make a point. We're looking for that point where it starts to roll back down. It's kind of started here. We don't know if it's going to pop up and make a new high. If you want to do the traditional charting thing, which I don't do anymore, you could look at something like that. However, this has already moved up today. Just looking at structure here, and also what could potentially happen this week. Where are we? What's within range this week? Our weekly projected high magically is up in this supply, and our low is below the low. So, that kind of makes sense. Statistically, we're likely to either end up here or down here, and we already know that beginning of the week. So we're on the way up here. We're going to look to see if this swing high breaks, and if it starts to come back down, we're going to look to break the low. We're already ready on this one. Nothing to do but wait for the swing high to break. right here. If that breaks, we're going to be looking for shorts. And if it starts to make a lower high and sell off and starts to come down, we're going to look for this low to break right here, and we'll target down here. So we already pretty much have a good idea there. We're just kind of waiting for the right entry. It's kind of right in the middle of a consolidation at the moment. Nothing really to say. Markets have flattened out a little bit. That's why I try to do our analysis at this time. We're in that time where markets cool down. There's nothing moving right this second. Actually watching strength. Let's see. Hold on a second. I don't have my strength tool on this one. Actually, I'll skip that for now. Yeah, this is, man, we got some stuff to play with too. Man, made major progress on the risk manager. It's like super cool. You can completely control MetaTrader individual positions with with the voice controller. You don't even need to touch anything. You can, man, it's really cool to talk to it conversationally, like you're speaking to a chat bot, and can control your trades in MetaTrader. Can say, select order number 13775 and close 25% partial, and it just bloop, instantly does it. That is a huge thing. Say set a pending order for 1940.1, set my stop loss for 1944.5, and set my profit target to 1931.1. Execute trade. Bloop, done. Just like that. And it's super smooth and it works great. Makes things really easy. And it calculates your lot size for you. Set my risk per trade to $17 per trade. Bloop, done. Never mind, scratch that. Let me set my risk per trade to 0.05% per trade. Bloop, done. So super cool. We're gonna test that in a group here in just a few minutes. We're gonna play with it. Really cool stuff coming. I actually just released it last night. I posted it up before I went to bed, and I've got some other stuff to post up here. But yeah, I've got a lot of stuff done over the weekend and took a full day, development day yesterday. Really cool stuff. It doesn't exist. Nobody has it. Can control MetaTrader 4 and 5 with a game controller like PlayStation or Xbox, and also voice controller. It's pretty sweet. It doesn't exist. We're the only ones that have it. Euro Swiss. Made a lower low and popped up here. Well, not really much to say here. I mean, it's just kind of back on the low. It didn't go very far. This pair just doesn't have a lot of volatility for one thing. 37 pips in a day. Really don't really look at this one very much. It's been so choppy. The Swiss franc has been so high for so long and distributing on the high, and every Swiss franc pair has been really choppy and rangy. Nothing really to say on Euro Swiss. Euro CAD. This can be good. We're still waiting to get back into our buyers down here. Hasn't happened yet. I don't know what this is. Some lower time frame stuff. I mean, there's going to be this kind of thing here, this little inflection point. Once we get up into that, may take a look at it. Come on. Mouse is not cooperating. Yeah, so it's kind of right in the middle. It's almost a range contraction. Things are contracting. You got lower highs and higher lows. This can be messy, like progressively reduced volatility. That stuff tends to resolve to the downside from experience. It's low volume. It's just progressively reduced trading volume, basically. Volatility overall. That stuff tends to spill, and we'll watch it for a broken low. If it comes down here, we'll see what we're looking for. It's within a weekly range to run down pretty low. So yeah, we'll watch this first. I don't know. If it starts to sell off, I wouldn't bet that that's going to hold. We'll probably be back down here. There's a structural inflection point down here anyway. You can kind of see it was like a range high gone to a range low. That level may get retested. That's, if it overextends the weekly candle by a little bit, that would make sense. This doesn't look very good right now, to be honest. This looks like this is going to roll over and come down. So there may be something here too. It's just not a good entry at the moment. And we're also trying to figure out what we can do over the next few hours. And just keeping it 100 for a second, like we're back into some demand right here. So we probably don't want to start entering short here. You could potentially be selling the low of the day right now. What if this did bounce, stops here, and then the next two candles go up like that? What if it does just go one more round inside of this, whatever this contraction is? What if it did and you sell it now and then it bounces? So it's just not a very efficient entry, and you can, clearly see the buyers in here, and we'll look at it on lower time frames. We just want to mark out what we're looking for so we can go down, drill down and see. And also just trying to some general predictions for where the market's going this week so we can kind of understand what we're looking for. Pound CAD. It's already marked out from last couple weeks. I mean, this is just, we're already ready here. We know what we're looking for. Nothing changed. Last week, it was just sideways. Nothing changed. Came down and bounced right on cue, right where we thought it was going to, and then boing, back up. So now we haven't resolved that. We're waiting to break the high. Yeah, I mean, this is really tight contraction. We're within range to cover anywhere in here. So we know what we're looking for. We're looking for broken highs and broken lows. Skip that. Made that easy. Broken low on pound dollar, but it's because the dollar is so crazy strong right now. Let's come back here. What was back here? It's gonna be a whole zone here, and we'll drill down into lower time frames and clean that up a little bit. But we know that below that swing low, if in fact that does break that swing low that hasn't broken yet, it's probably going to be back into here somewhere. There's a whole bunch of stuff in here that's going to happen. Bunch of settlement, orders squaring up with each other on the other end. Pound dollar, we did break the low. So at some point we're going to be looking for some kind of retracement. It's already started a little bit, but it's not really a good entry right now. I would probably wait. This doesn't look good. We'll watch the dollar. Whenever the dollar finds the high, that's when we're going to start looking for a retracement here. And it'll be one of those where we'll take a basket of a whole bunch of stuff on the dollar. Just in its simplest form, looking for this kind of thing. To retest that, possibly go higher. I mean, other than that, there's going to be layered zones up here. This really, we never even made it anywhere near that last week. So yeah, on the way down, we got our levels above us and below us that we're going to be looking for. And obviously we'll look in a little more detail on lower time frames. But as of right now, today, pound dollar's broken the swing low here. So it's definitely not a short. We don't want to start selling this now. We don't want to sell this and it does that. It depends on what time frame you're looking at. But just in general, we're not really looking for heavy shorts, and this kind of a big bodied candle like that, a lot of times that stuff will go break the low. So it wouldn't surprise me if it goes and breaks the low. It's just not it yet, because a lot of times what will happen is you get this big, huge candle like this. It'll tend to pull back up to that center mass. Also happened to be a previous low. It's not a coincidence. It's just how the markets work. That's why I don't use trend lines anymore. Once you start to see what's actually happening in the market, your whole outlook will change. So it's likely going to come back up here, probably reject, and it may go back and break the low later. So you don't want to really sell this right now, because we may have another 4 to 8 hours of upside at least. And then maybe it gets wrecked and goes back and breaks that low. And then we're going to really be looking for a bounce down in here. But we may be able to catch the short too. It's crazy because that could be another pump in the dollar to go break the high maybe. So we'll watch that. But you probably don't want to mess with this either way. You could, honestly, I would rather, for a day trade, I would probably bet that it's going to pull up just a little bit more and then reject. So this could be a thing. We'll watch that. Pound dollar, that could be a trade. Pound yen, still inside of this range. Again, this is the most important part of the week that people forget about sometimes, is our higher time frame analysis in the beginning of the week. It can be the most important thing because you set up all your levels and you see exactly what's going to happen, what's above you, what's below you, what are our target levels if the market goes up versus when the market goes down. And this can make the rest of the week so easy that you're just sitting and waiting. You're just waiting for stuff to hit. You're waiting for price to get into a level of interest, and then we're watching lower time frames on the range tool to try to figure out what exact levels within those zones are we looking to mess with. Did we just break a high? Did we just break a low? You know what I mean? This can be the most important part of the week that people just disregard or forget about. So right now, pound yen, no go. We're right in the middle of a range consolidation. Probably don't want to mess with it. Got an equal opportunity to get stopped out both ways. That's how I'd describe it. We're right in the middle of a range consolidation. Now, this is very high, obviously, because the yen is very low. And to put things into perspective, structure-wise, we're way up on a high, but we're distributing on a high. We would watch this with maybe some kind of basket against the yen index. We know the yen's very low. It pumped and then pulled back, and this is the opposite of what that's doing. This may be a short coming up, to be honest. This looks like this is going to be a short. So we'll watch the yen here, lower time frames, but it wouldn't surprise me if there's, whatever this does, there's a red candle coming, another one. We'll come back to that. But yeah, right now, probably no trade. There's nothing interesting on the 4 hour. Moving on, pound Aussie, we were invalidated here. But, this kind of stuff eventually is going to crack. So we invalidated there. We're really waiting for up here anyway. And if that lined up with our high of the day, magically lines up with our weekly projected high on the range tool, imagine that. So we've got a very clear target up here on pound Aussie. So we know that there's going to be a trade coming there. So we're going to wait for a pullback. This is a big expansion at this point, which is interesting. Got, broken lows and now broken highs. It's big range expansion. So if this did scream all the way up to here, oh man, definitely looking for the short back into equilibrium. Easy call here. We're going to be looking to sell the high of the week on pound Aussie if it runs straight up, and we may be able to catch some moves here with a tight stop, possibly with a stop to go break the high, to go break this spike high. This may be on the way up to break the spike high and head up there. So if it gets up there, that's going to be a pretty easy to understand range expansion, and we'll be looking lower. So we'll watch that. Obviously, we'll watch the pound. I know the Aussie was down too a lot, so that's kind of why this is happening. But yeah, if for some reason this made it up to here, yeah, that's going to be looking good. And strong dollar today. Everything's flat and the dollar's strong. The whole market's just dead flat and a strong dollar. So pound Aussie is something to watch. It could be potentially a lower high. We've been waiting for that to happen. Pound Aussie, pound Kiwi. Again, Mr. Slithery the snake. We're way up on the high and we came down. Right? So now, on the downside, Mr. Slithery is now going back up the mountain. Eventually, he's going to make a lower high. So there's a possibility that price rejects this consolidation up here to make that lower high. So there's a really good potential short here. Big potential short somewhere up here for a big move to make a lower high. Eventually, it's going to. And maybe this consolidation stops it. and it comes over here, just can't get through that, and comes back and does something like that, and we get 500-600 pips out of it, whatever it's going to be. You know, slam and move. Like, we catch it every time. Like, we caught this one. It's not marked here, but we caught this short up in here, and we had to wait days. It sucked. And then all of a sudden, down she goes. We caught this like 2 weeks ago. I remember this. It was like a Friday, and we were sitting there like, God, it won't come down. It won't come down. And then Tuesday, down she goes. Hundreds of pips. 470 pips to the downside from where we were getting in on the top. We were in on the top up here short, and it was painful. But then you look at it later and you realize we consistently make good decisions. You know, it's just hard to sit through the noise sometimes, and that's why low risk is the answer. Low risk, bigger distance. Just give it a couple days sometimes, and do both. But there's a lot of benefit to taking lower risk positions and just letting it run a little bit, just for 2-3 days. Anyway, looking for the lower high possibly, and it ties into pound Kiwi. That's why we're talking about it. Pound Kiwi, same thing. New Zealand dollar pairs, ridiculous high, completely crazy. Got a big expansion up here already. Got lower low, higher high. You know what I'm saying? Like, we already know what we're looking for up here. Like, this is not a big surprise. We're looking for supply level up here in its simplest form, and then we'll go down into our range strategy and see how that lines up. It's within the weekly range to break that, and it may barely pop this. There's a gap in consolidation right here. You have a consolidation up here at the top, and you have a consolidation right here, and right in the middle of that, there's kind of a gap there. So that's something that a lot of traders are going to be looking for. It's probably going to blow through there and hit something like this. So it's either going to make a lower high or not, right? And we'll look at it on lower time frames. It's either going to make a lower high or not, or break the high. And if for some reason it broke the high, which is unlikely this week, yeah, it's unlikely. After coming off of a lower low, we really should be looking for shorts here coming up. Not yet. We'll assume that it's going to pop that high first, but coming off of a lower low on up into something like this, like if this distributes, we'd be looking for this to pull back into the equilibrium of the move. It's the same thing, range expansion. It's just one of those things. If you don't know about this, then you just don't see it. So probably just did some people some favors here. Pound Kiwi, we'll watch for that. That's probably going to be a trade too. Let's see. Aussie dollar wrecked. Just waiting for the dollar to stop, basically. God, there's really just nothing to do here. Once you go back far enough, you're talking about going back a year. This money's not still here anymore. We talk about this all the time. People get super triggered over this. People go back on a weekly chart and monthly charts, and they start looking at these levels from like years ago. That money's not there anymore, guys. Like, it's gone. Like, these diamond hands aren't still holding this from a year ago, waiting for it to come back to their entry from November of 22. Let's just be realistic about that. Come on now. People go look at these monthly charts and they're like, oh yeah, this level from 2015, look, it's we're tapping liquidity from 2015. Okay. Yeah, I'll get right on that because that makes sense. Those diamond hands from 2015, but the point is, once you get back far enough here, once you go back far enough chronologically in time here, the whole fabric of supply and demand breaks down. Like, the whole logic of it completely tears apart. You would be, if you're looking at these levels back here, that means that you're expecting that all of this money is still there in the same configuration that it was in November of 22. Nobody's sold their positions. Nobody's gotten liquidated. Nobody's rolled it into emerging markets. Nobody has done anything, whatever it may be. Nobody bought AI stocks with it. You know what I'm saying? Like, you would be expecting that these Aussie dollars positions are still there in the same configuration back a year ago. It just doesn't make sense. We talk about this all the time, and you either have an epiphany or you get triggered about it. Like, it doesn't make sense to go back and look at this stuff. It just doesn't. This money's not there anymore, guys. It doesn't exist. This is a fingerprint. This is DNA evidence of something that's happened in the past. But it's happened in the past. It's not there anymore. It's just an interesting concept to think about. People don't think about this stuff, and they go back and there's like, oh yeah, we're going into an order block back here. Okay, from a year ago, you think that money's still there? Think about it. That's ridiculous. It's honestly ridiculous. So what we've got here is we can trade a statistical range. That's the answer to the present. This is the answer to the present and the future. We can look at the past, but once you go back a little bit too far, the whole logic of that starts to break down. It's just a whole nother conversation. So anyway, point is we're on the lowest low going back a year. So in our recent price action, we're about to break a low here. Possibly, if this breaks the low, maybe we'll take a look at it. It'd be one of those things where, low risk blind entry on the weekly low. Other than that, this is either going to stop here and bounce and come back or not. And that's one of those things where it's probably about time to start trying it. I mean, we're in the buy zone right now. If this is going to be just kind of an equal low, I mean, man, we're there now. And again, this has to do with the dollar. This is Aussie dollar. So going back to the dollar index, we know we're 8 weeks to the upside, and we were just talking about looking for a short on the dollar, right? This is like really getting juicy on the dollar index, the US dollar. It's about time for this to start reversing. Now, how could we play that? Maybe Aussie dollar that's on a yearly low. You know what I'm saying? If the dollar index turns around, just because these candles are red doesn't mean it's not going to do that. Immediately turn around and just be a well-defined range low that we just haven't seen yet. There's a very good possibility that happens, So, it's something. So we're on the low, again, watching the dollar. We're just on the dollar. Basically, the dollar is the big elephant in the room here, and 8th week to the upside. And again, we'll just watch levels. I'm assuming that we're going to break this high, and then we'll try to figure it out from there. And again, we'll try to time all this with the dollar. Right. Yeah. Right. Yeah. I know what you're saying. As far as market structure, right. But the thing is. Just and it's the thing is expecting the market to stop there because it stopped there in the past, right? And that's the thing is the structure. If you kind of think about it, the structure really only matters if the money's there. If the only reason that it would matter is if that money's still there, because it's kind of just like, it's like digging up bones of a caveman, and I don't know. Trying to guess on what he would eat today, for dinner when that food didn't exist then. It's hard to, it's just it's just a logic thing. It's an alternate viewpoint because so many people look back on these crazy, like back to 2015. And if you think about it, why would that even matter? If that money's not there anymore, then price isn't going to slow down and start filling orders when it gets there. Because in order for that to happen, you would have to assume that there's money on the books here still that needs to be settled and filled when price gets to it. That's why price slows down, is because orders start filling, right? But if it's extremely unlikely that those orders are there, then that's a whole different story. And there may be pending orders there, but we're talking about existing orders on the books. It's just a logic thing. It doesn't make sense. Once you go back a certain amount of time, it doesn't make sense because that money it's almost impossible that it's there. It's virtually impossible, actually, that money's still there from a year ago. It's just not likely. So expecting the price to stop there and make some reaction, you would have to first assume that that money is there for price to slow down and start filling orders on the books that are still there open in exposure. And that's kind of the point I'm making. Once you go back far enough, it kind of doesn't make sense anymore. But the flip side to that, like we said many, many, many times, is humans and even software use fingerprints of the past to make decisions. We look at this, we have to make sense of this market somehow, and say, look, there's something has happened here in the past a year ago, so maybe it'll happen again, or it's some reference. It's a reference point. It's like a map. You're looking at a pinpoint on the map. It's some kind of reference to something, even if that's not there anymore. Like the ancient ruins, it's not whatever, it's not there anymore, but it may be on a map because it used to be there. But that doesn't mean you're going to go there and dig up gold in the ancient ruins, because that gold isn't there anymore. That money isn't there anymore. You're whatever, whatever an analogy. And that's just the point I'm making. Just the point I'm making. It's a thought experiment of, wait a minute, that it doesn't make sense to expect that money's still there, because in order for there to be a reaction at all based on this liquidity back here, then that you would have to assume that those positions are still open. Is it likely that those positions are still open a year ago? And then, not to mention that, but going back to like many years sometimes, and I've seen a lot of people do this. Does it really make sense is the point I'm making. So, the flip side is people do make decisions based on those levels. And it's about how markets actually work, and what's actually, when markets come down here and it starts to slow down, it's because people are either buying in the other direction, or the market is running into orders that are filling that are still on the books from a previous time. And if we're at a multi-year low like this, or a yearly low, then it's just it's just virtually impossible that money's still there from a year ago, that people have been holding a long position for a year. I know banks hold positions for long times, but depends. It's just the logic of it. It's just a thought experiment. It's, especially with higher time frames, it really just doesn't make sense. It just doesn't. So then the thought experiment is, okay, if that doesn't make sense, how do you figure this out? Other than looking at your recent price action, is what I'm saying. What I'm saying is just think about whether or not there's orders to be filled there anymore. Old orders is what I mean. I'm not talking about new orders where people posting pending orders and stuff. And that's kind of the point I'm making, is people use those old levels as reference. Anyway, something to think about. It's a thought experiment more than anything. So we'll watch this. We're waiting for the dollar probably to pop that high, and there may be a major reversal here on this stuff. Just easy to understand. Low of the range. A lot of times it'll barely break the low and then start screaming back up. We'll watch this. Next. All right, so here's something that's invalidated. Again, in its simplest form, just looking for where are buyers and sellers. Bouncing here on Aussie yen. Yeah, I mean, just normally these kind of highs would break. I would assume that if it did go up there, that would break. Yeah, so gosh, where are we within our range here? Yeah, so we're well within range to break that low this week, which would put us down far here on Aussie yen. Depends on the yen. We're watching the yen right now. It's kind of picked back up. I don't know about this one. We may leave it alone. What's the range on it? 70 pips. Okay. So it averages about 70 pips in movement per day. That's not terrible. The yen's been moving lately. So, I mean, right now this looks like this is bearish to me, but it's already down. We're already down back into a deep, dense consolidation right here. So it's not something you probably want to start selling into, but yeah, I have, if this were to go down a little, it's probably going to come back up. This is probably closer to the point where it's going to bounce back up in some kind of a range. I don't know. We'll watch it. There's not enough information here yet, really. But maybe, it's down. Aussie CAD, all these Aussie pairs are down. No, it's not really invalidated yet. We'll assume that it is. Or we'll assume that we're going to break that spike low. This is really, seriously getting juicy here, but same applies here. You got to go back to November of 22. Say, okay, are the diamond hands still holding this Aussie CAD from November of 22 in this consolidation? Should I expect that all of this is going to all the settlement's going to happen when price comes back into here? Then it's running into clusters of orders from a year ago. That kind of doesn't make sense. And, it's just from a logic perspective, it doesn't make sense. But the reality is that doesn't mean that that doesn't mean that people won't make decisions there. That's the whole point, is that even though it really just doesn't make sense at all, people still make decisions there. So, that's kind of the interesting point, is that, we've said it a million times. It doesn't make sense, but people still make decisions there. Because it's, humans tend to rationalize their environment and rationalize things that are happening based on things that have happened in the past. And that doesn't mean it's right, but it kind of, it's a self-fulfilling prophecy is the whole point. It becomes true because people believe it. Even if it's not true, it becomes true because people believe it. Supply and demand is one of those things. It just is. Once you get past a certain amount of time where it's just not logical that all of this stuff is still on the books anymore, that money's moved. That's kind of the point. And that's, we're talking about high time frames. We're not talking about lower time frames. We're talking about higher time frames. It's just something to think about. It's a thought experiment, and it doesn't mean it's wrong either. It's I'm saying that logically it doesn't make sense, but it becomes true. And it's just one of those weird things in trading. It's like Fibonacci. I know Fibonacci, there are Fibonacci sequences in nature. That doesn't mean there's some magic in the market just because millions and millions of traders are all making decisions at the exact same levels. Literally millions of traders draw their Fibonacci lines from the same highs to the same lows, and then expect it to be magic when everybody makes decisions at the same points. That's a self-fulfilling prophecy. It's like trend lines, same thing. Everybody sees the same trend lines and everybody makes decisions there. There's no magic in the line. The magic is in the fact that everybody's making decisions at the same points. And that's the thought experiment. That's the thing that nobody thinks about. It doesn't mean it's true. It means that it's becoming true because everyone believes it. And there are many things like that in life. Many things in life like that. It's just an interesting thought experiment. Doesn't mean anybody's wrong. It means that maybe there's another way to think about it. Aussie CAD, we're kind of back on the low here. Again, same thing. I would expect that this is going to break at some point. That this low is going to break. And we'll take a look at it. It's just really nothing to do other than it's either going to break the main swing low or not. We got a dense consolidation right here. A lot of times it'll poke just below that. Yeah, we'll watch it. It's already down. When's the green candle coming? And what's likely to happen is that this will probably break that low and then pull back a little bit and go into some kind of range, and it might even dump later. It may pull back into some kind of consolidation. Maybe we can catch a trade there. This market's dead, other than the dollar. It's just screaming to the upside. Next, we never hit any of this stuff. Almost. Never hit any of this last week. Been waiting for these levels forever. Oil was back down. It was annoying. I got stopped out on Friday and then it came back down. That's invalidated. We've already bounced here at our inflection point. This is all stuff that was set up from last week that just hasn't resolved yet. Just what are we looking for in its simplest form, and we'll look at it on lower time frames when we know that we're in a level that makes sense. We'll take a look at it. Same thing here. It's probably the same thing. It's already down. It's probably going to stall and bounce and then pull back up a little bit. It's just how it goes. Look for the top end of this up here. Really this whole thing over here, but we'll look where the sellers were. So, you know what I mean? We're already ready. It's one of those things where we're kind of waiting for the move. CAD yen distributing on the high. Nothing's changed. This is very, very, very high. Yeah, I mean, this is just, it's way up here, and it's just kind of rolling into a distribution up here. You can see this starting to roll out flat. It's just, you can see the majority of it like tightening up. You can really see it condensing, kind of consolidating in here. Eventually that's probably going to do that. Just from experience, it's probably going to go down, but we're not, it doesn't mean it's a short right this second. As of right now, what do? Do you buy into these sellers right here? There's nothing but selling up here. Do you buy into it? Go long, you know what I'm saying? It's probably not a good idea. That doesn't mean it's not going to go up a few pips. We're just looking at structure right now. We're not looking at the 1 minute chart. We're looking at, what's likely to happen this week. What should our directional bias be? And this kind of stuff can be deceiving too. It depends on if we're going to get volume. We'll take a look at the news too. The job stuff was weird last week. The job stuff came out a little unexpected, or different than normal. I think we had fewer job openings by quite a bit, had higher unemployment. I don't know why everybody keeps trying to spin this job number thing for politics. It's just, I don't know. It wasn't great what came out last week. Everybody's trying to spin it. They revised the numbers down. ADP came down low. It's just like the whole job market is deflating is what it looks like. Fewer people working, fewer job openings at the same time. And everybody's trying to take a victory lap like it's a great thing. I don't know. It's probably a good thing for inflation. It's what the Fed wants to see is fewer people working. Anyway, nothing really to say on CAD yen. Dollar CAD. I mean, same thing. We're 8 weeks to the upside on the dollar, guys. I mean, good game, dollar. But we're 8 weeks to the upside. Do you want to start buying this now or no? Look at the level on dollar CAD. Same thing on the dollar, just the dollar period. But look, just look at where we are as far as the long term. And, you don't want to take any big swing trades long here, obviously. We'll watch these highs. They've already broken. So it did break. Every one of these highs has been broken now on dollar CAD. Big expansion off the high. You had lower low to a higher high, and it broke all these swing highs back here from April. In May. So April and May highs have both been taken out. I mean, we can come back up here and say, what's next? Got this right here, this swing high right there. As soon as that breaks, are we within range for that? Probably. So that's the next thing. Do you want to buy it hoping that it gets there? That's the real question. Probably not. It's about probability sometimes. It just is. Is it a good idea to buy that? Just comes down to risk management and probability. Is it a good idea? Probably not. So we'll wait and check this out. There's really nothing to do here. We're on the high on dollar CAD. I would watch out for some downside here. And we already know that the dollar is at a sketchy level. And when it starts to come down, this will come down with it. Probably come back and break that low into there. how much more? Where's the high of the week? We'll watch it this week. We'll watch the dollar to figure out how much farther this is going to go. I mean, we could come back here and try to, there's a lot, you could look and see whatever. We could try to figure this out, where it lines up with what would be about the high of the week statistically, and try to take the best guess that we can take. But, is it within range to do that? No, magic. Just so happens to be that our weekly projected high, if we had an average size weekly candle to the upside, one more upside this week, that would put us in those sellers. So, we'll watch this. I don't know what I would do there. You can probably take a risk on it with a stop. There's nothing wrong with doing that. Could take it both ways. Say, look, we're going up still. As it pulls back into a level, I might wait for it to pull back a little more, but it's about center mass there. Also happens to be some previous highs. That kind of makes sense. If it pulls back into there, you could take a risk and say maybe it is going to run a full week to the upside again. And if it does, then that's probably going to be a trade. You can probably take it long and then a big short. But this is like swing trade short stuff. Once we get up to the high of the week, not yet, but we are above a high. We did break the high. So it's something interesting there to look at on dollar CAD. You really feel risky, maybe you could take some pullbacks long, but I don't know. I would leave it alone personally. Just kind of waiting on that. What else? Let's sip this coffee. Dollar is very strong. It's just not going anywhere. Market's dead. Swiss yen. Sorry, I was just looking at the dollar chart. Swiss yen range. Buyers on the bottom, sellers on the top. Try to stay out of the middle. Probably not a good idea to make a decision right there at the moment. Waiting on the yen. The big range consolidation. In its simplest form, we're just still in a range. We're not at the top yet, and we're not at the bottom. There's a possibility that this makes a lower high. I'd say, again, what we're looking for later in the week, not right this second. But, there's a possibility this pops up here and just doesn't beat the high and comes back down. Eventually, it's going to make a lower high. It's either that or it's going to make a higher high, right? And either way, you try it on a lower high and you try it on a higher high. Short, it's not a long. Especially not in this consolidation. So, again, watching the yen. The yen is at a very interesting level right now. The yen as a currency index. So this is either going to break the high or make a lower high, right? So we'll watch those levels somewhere. Lower high would be about where the hash is. So you got three choices: lower high, equal high, or higher high. So you could try it 3 times with a stop. You could leave it alone. I don't know. Well, we'll take a look at that when it gets there. It's not there yet. Man, there's just like nothing like super crazy. Like we got to set an alert and wait for it. Consolidation stonks. Looks like it's going up. And if that runs up, we got a real possibility of the dollar coming down. So just keep that in mind. Possibly the yen pulling back too, but where the dollar is on an 8-week high, this looks like this is trying to run up and retest. It's stopped and consolidated. It's trying to run up and retest the high, if not break it. Hate to say that, but it is. Looking at the S&P, this is not a short. This is not something you want to start selling right now. Bottom of a range pretty clearly, with targets higher. And what does that mean for the dollar? Next, same situation, consolidation up here. It's possibly trying to eventually end up and retest. Now, what happens over the next few hours? Who knows? We're going to figure that out on lower time frames, but we need to know what we're looking at this week. It's always the most important thing. Going back and looking at all this stuff, it's like, all our levels tend to be pretty good. And if we make decisions in those levels, then we're probably making good decisions overall. Just where are the buyers that have held the market and have not been stopped out yet, because that's where your liquidity is. That's that and lower is where your money is. And on the upside, the opposite of that. Where's the point where your sellers have not been taken out of the market yet? Because that's the level that held. It's probably going back there at some point. Kind of nothing really. I mean, you got a big, huge dump below that. It's either going to be way down. If it were an average size weekly candle, your low would be down here, or your high would be up here, depending on which direction it travels. So it's either going to retest the high, retest or break the high, or it's pulling back down into a known level where buyers have held. Inflection point right here. It's super simple. The hard part is the risk management. So we'll try to figure out which weight our probabilities, which way is it going? If this does pump, there's a case to be made here that this is kind of, the bottom of a range block-ish, and if this does run up, then that's going to put some pressure on the dollar, and the dollar's on an 8-week high right now. So you start to see the puzzle being put together. The Dow, do you want to sell this right now? Today? Probably not. Just in its simplest form, we got more sellers up here just within range today. We got big levels up higher. Notice how all of these stock market indices look like they're at the bottom of a range consolidation. Now that's no guarantees in trading, but I mean, I would say there's a pretty high probability that we're heading up at least a little bit. So it's probably not a short. So how do we play it? How do we get in it? You look for some pullbacks, trade from levels. So we've got a pretty good bias here that we're probably going to be up at least a little bit in the stock market indices. With the dollar broken highs up 8 weeks straight. So, it's kind of see the puzzle being put together here. Probably need to watch the dollar for sure. And then segueing that into gold, we're almost there. VIX is probably, it's probably way down, gapped up a little bit here, but yeah. VIX is getting to that juicy fruit level again. Way down here, easiest trade in the market. The number one easiest trade in the market is long VIX, just on the low. Easiest trade in the market, period. Again, it's a risk management game. Can you sit through the swap? Can we time it right to not have to pay so much swap? I know the swap can be rough on the VIX because it's such an easy trade to make you pay for it. So, it's just the easiest decision in the world. And what does that mean for the stock market? It's likely going to be some volatility where it slams up like this and then big down somewhere too. We're up on a high with the VIX down at historic lows, like pre-COVID lows. It makes sense that we're probably going to start expanding here and then probably get a big move back down. It's my guess on what's going to happen. See how that plays out. Oil got to short right on Friday. Got stopped out of it. Nothing really to say here. We'll wait and see if that breaks the high. If it does break the high, we'll look at it up here. Same thing. We just sold the high of the week on a higher high. Major high up here on oil. This is another one we really need to watch. This whole thing could end up coming all the way down here like this and not break it yet and then go up later. Happens all the time. They stop short of these levels all the time, pull back, and then go hit them. So it's either going to run up and break the high, and we'll probably start selling it again. This is a major, major level here on oil. What a run. I mean, you know what's crazy is it's painful. 15 lots. I had 20 lots on one of these down here on the low and just got stopped out. I almost beat that challenge. Almost. I missed man, this was one of the worst FUs I've ever gotten trading. Was that oil. Missed it, but I mean, it hit it like to the pip. I was within 1.6 pips, something stupid on one of these. I forget what that might have been, Aussie Swiss, but man, had it. This too had 20 lots on one of these and 15 on the other, and just kept catching the bottom. And then you look up a couple weeks later, it's up 27%. Just, man. Game changer. That's a game changing trade right there. Caught it. We caught it multiple times. Big lots too. And just couldn't sit through the stupid noise down there. It just kept running up and pulling back and stopping out at break even. It'll go and then stop out at break even. Go, stop out at break even. And then it goes. It's ridiculous. But we had it right. And this is the important part, is that people forget sometimes. Like when we're looking at these big levels like this, then you go back and look later. We're at another one of those big levels right now on oil and the dollar. There's a lot of stuff in the market that's at some major levels right now. Yeah. So somewhere up into here, we probably want to start watching this. We've broken the high again. Had it short on Friday. Still not sure what's going to happen here. We'll watch this. But we already know that we're going to be watching that right there. Center mass of that big bearish candle. This big full-bodied bearish candle right here. Or center mass of that. It's an algorithmic hotspot. So as this pulls back up, it already did. It pulled back up and rejected. This may be on the way down. Just remember how high this is, and it's broke the high and the move that it made. This made a very large move. So we need to watch this. If this will pull back up a little bit, I might try it. Man, it sucks, man. Had it right. I just had a tight stop on it. Might have had this right. So we'll come back to that. This still may be a trade here. As this hits levels, maybe trying it. It's already rolled over. So there we go. Back to gold. Talking about the dollar being on the high. What happens if the dollar comes down? We're on an 8-week high on the dollar. What happens to gold? Think about it. 8-week high. Let's switch over to the dollar real quick. The US dollar, we already know there's an inverse relationship here. We're coming off of a broken low to expand the range. We're breaking the high right now, today. We're on the high 8 weeks to the upside. Whenever the dollar does find its high, and I'm not saying it's here, I'm saying wherever it is this week, probably somewhere up here. You know, every time this goes up again another week, the probability gets higher and higher and higher that the reversal will pay out. So when the dollar does reverse and pull back, what's gold going to do? You know what I mean? Whatever the dollar is going to do, as the dollar inches higher and higher and higher and then reverses, what's gold going to do? You know what I'm saying? We've got some good trades coming. Like, there's good stuff coming in the market. We'll come back and I'm sure we'll clip that out later when it happens. That'll be a big surprise, right? Yeah. Rejected right on cue, right in the sellers, gone, down she goes. Nothing really here. We're kind of in the middle of a gap. You know, where might that reversal point be? We'll watch this kind of stuff. We'll have to pay closer attention to it when it gets down. But, sometimes stuff likes to bounce temporarily at like the highs of the range. Like this was a range consolidation is what it is. Sellers on the top, there's buyers on the bottom. Try to stay out of the volume in the middle. But just, in here, you can see where your buyers have held the market and have not been stopped out yet. These traders are still in. That's going to be as the dollar breaks the high, it would be completely normal for whatever this is going to happen here, for this to come down here. And we probably want to take a shot at this because of what could happen. If you look at where the dollar is, what if the dollar sells off the high on an 8-week high and comes down for a month? What's gold going to do? I mean, it may not go that high, but it's going to go up is the point. I'm not saying it's going to go to 2000. I'm just saying, assuming that the dollar inches higher this week, what if this stops here and then starts to pull back up like this? And then, what if the dollar does come down and this pokes up through here, does this kind of thing, and we're way back above 2000 on gold with a dollar that's flying to the downside for weeks on a pullback. We have weeks to the upside on gold. Got some good stuff coming. We're just not there yet. Think about it. So we're going to obviously pay very close attention to our levels down here. I'm going to get this all set up and ready to roll. I would assume that we're not going to go back and break that low with the dollar where it is. It's unlikely. So this is going to be a thing here. I know a lot of people trade gold. Again, the poll, our Discord poll, it wasn't even close. More people trade gold than anything else. So more people were interested in gold than anything else. So we're going to pay a little bit closer attention to this, and we'll drill down into lower time frames and refine these levels down. We'll watch this. We'll see how these levels line up. Our weekly low, if the high of the week is in and we're coming down, our weekly lows down at a very suspicious level. So that's a possibility. Might be looking to buy the low of the week this week on gold, which would be selling the high of the week on the dollar in a way. Just probably a very easy trade, a very easy trading decision to be made coming on gold. But we're watching that. We're waiting for the dollar, which is still strong this morning. It's trying to break this high, and as soon as it does, you know what I'm saying? As soon as that breaks that high, there's a whole bunch of stuff going to start kicking in, and it's basically there now. So here's what we're going to do. We're going to go down and start looking at our lower time frames, and we're going to dig in and see if we can find some entries. We're kind of waiting for the dollar to do that, because when it gets there, there's probably a whole bunch of stuff that's about to line up in the market when the dollar finds its high of the day, and it's pretty close there now. Let's see. Where are we? Yeah. Pretty close. So we're in a supply level. Let's just look at the logic of this. On the dollar index, we're in a major supply level. We're currently on the high of an 8-week run, 8 green candles in a row on the weekly chart, on the high in a supply level to break a major swing high. Wherever that is, back here. Major swing high here. Or, yeah, maybe you got to go farther back, but we're working on breaking a major swing high right now at the top of an 8-week run in supply. So it just doesn't get much better than that. You know what I'm saying? As far as the decision. Now, the question is always, how much distribution is there going to be? How much distribution is there going to be up here? How many days before it actually does it? Are we going to go sideways for a day or two into tight consolidation before it fails and starts running back down? You know what I'm saying? So we're going to try to figure this out. We'll keep an eye on it. And it doesn't mean it's not going to run up another day, but just where we are, it's time. At minimum, it's time to pay attention. Again, look at those weekly candles. We're breaking a swing high right now. It's just time to pay attention. So there's that. The major situation happening right now. Yeah. We're entering right now on the weekly. If we did our weekly levels, we're entering right now where our sellers have held the market. So this is obviously something we want to pay attention to. Probably going to catch some trades here today. Today might be the day. It's possible, at least for a pullback, because we are on a higher high, even for a day trade. I mean, we're on a higher high, but could be like a major type of thing. So we probably want to watch gold. Want to watch stock market indices. Oil's at a major level. Big, huge high. There's so much stuff going on in the market right now. So anyway, let's dig down. Take a look at lower time frames. If you're watching this video in the future, have a good trading week. We're going to try to catch some trades here.